Today we'll share with you our thoughts on the top 10 stocks that we think may present some good opportunities in the second half of 2019. Hello and welcome, I'm Dale Gillham, and today with me is Janine Cox, and we are Australia's most trusted stock market educators.
Dale mentioned today that we're going to be looking at the top 10 stocks to watch in the Australian share market for the second half of 2019.
If you haven't subscribed to our channel, now is a perfect time to jump on board by clicking that subscribe button below. Also click on that bell icon on the right so you get alerted to when we upload new videos.
When looking at this list of stocks today, you need to remember that these stocks may or may not be the best performers in the second half. Rather, they are stocks that we believe are interesting and we believe they're likely to do well into next year.
Now before we get into the stocks, we'd just like to mention that this video is not personal financial advice. Before you make any investment decisions based on anything in this report, you do need to do your own research and satisfy yourself as to whether or not these stocks will suit your portfolio. We also need you to be aware that Janine and I, whilst we are fund managers, traders and educators, we are also technical analysts. Given this, we'll not be discussing fundamental metrics or getting into the business model or economics of the stocks discussed.
Also, you'll see that our charts are quite simple without a lot of analysis placed on them. We've done this intentionally as most watching this video are beginners and so wish to avoid complicating the analysis for them. Rest assured that we've done extensive research in price pattern and time prior to this recording on all stocks presented.
So let's get into the stocks.
All right, let's get into the first stock. Now, A2M, which is the A2 Milk Company. It's done extremely well, Dale, over the past few months. And look, I am expecting A2 Milk to pull back a little bit and have a bit of a breather. However, I still think it's likely to be a good stock in the rest of 2019 and possibly into 2020. I think it's a $20 stock, more medium to long term.
Yeah, I do too. That along with Bellamy's is looking good, which is our next stock. So they're both in the same industry pretty much, so they both look quite good.
Yep, okay. So with Bellamy's, interesting stock. Looking at it, I've got the monthly on the left, by the way, and the weekly on the right. If you follow our Tuesday show, the live show, then you would know why we do that. So make sure you tune in to find out.
We covered A2 Milk in the first half, or our first recording for the 2019, didn't we?
Yeah, we've actually had it in a couple of times, I think, A2 Milk, and so it's gone on and done really well since then.
It has. I think there's more opportunity here for Bellamy's, isn't there?
Yeah, Bellamy's I think we've covered as well over time. It's a much more volatile stock, so it's a higher risk play than say A2 Milk or some of the other ones I'm about to talk about. However, it is still a good stock, solid stock to be able to trade, but you've got to have some really good strategies for this one because of how volatile it can be on the downside.
Yeah, it can be a little bit more volatile, doesn't it? But it is, as I said, it does look like it's got more upside than A2 Milk in terms of that.
Yeah, so if we're just looking at the monthly picture on the stock, you can see that over time it'll have really nice runs and then it will correct itself for a number.
So you're saying this one's not a buy and hold, or it is a buy and hold, or is it more for traders? Or what style of person?
This is more a traders, definitely more of a trader's stock. I've started off at the monthly chart on purpose, but I will go back to the weekly chart. Yep. Now you can see on the weekly chart here, there's a lot of resistance here. So I've got a little what we call the crosshair here, which just allows me to quickly identify where some of the strongest levels are for the stock. So you can see recently it's hit it twice and it's pulled back from that level. So that's really a good thing. When you see that, it's actually, for me, that's more confirmation of where the next potential opportunity is likely to be. Now, if Bellamy's goes through, and this is what we do for all stocks, we're looking at the upside and we're looking at the downside. So if Bellamy's goes through this low here, then we're going to be waiting for quite a while before we'd enter. It's not about trying to pick the stock when it's low. It's about picking the stock when the decent amount of money is behind the stock.
Yeah, and I think this one's probably a good sign of how people tend to follow the herd and get in on the wrong period or get it at the wrong time. When we find people, when we're doing live shows and things, people talk to us about the same stocks all the time and for weeks and weeks and weeks, and it's generally those people that follow the herd that get in at the last minute before the rundown. But if we look at the weekly chart, just to have a bit of a show people what it's about, you can see here, back here, there's a lot of volume right at the end, and it comes down a little bit in price through here.
In 2016,
and most of the volume's here, but then you see here right at the end of the run, they're all getting out at the last part of it because they're sick of losing money.
So it's too late.
So it's too late. They're getting out at the wrong time when they should be getting in, and they're getting in when they should have been out of it or getting out of it.
So can you show the same thing there then from the all-time high?
So here's the all-time high through here, and you can see a lot of volume here, a lot more than what it was prior to that run up. So we've got a bit more volume through here, a lot more volume through into here, right into that peak.
Yeah,
and
so
then
it's
volume drops off
exhausting it.
again and exhausts. But then have a look here, right near the end of the runs,
Big volume.
big volumes coming down, and people getting out or trying to get in, trying to buy cheap. Bottom picking was happening here. I know a lot of people going, oh well, it did all of this, now it's cheap, I'll get in. But then they've got caught again, and they're still getting out, and we come right down and look at all our volume now. Now it's dropped right off through here, right at the bottom, and now it's picking up again through here, and it dropped off a bit. So interesting to see. It is interesting, and it's so common for people to get in at the wrong time because they're just looking at chat forums or whatever it is and taking the lead from other people rather than using solid rules and process that we talk about it all of the time. And we can look at other stocks like this, couldn't we?
Oh yeah, there's plenty.
There's plenty of examples of this.
So while it's actually trading down, we're not saying that this is an opportunity. We're saying it's an opportunity, but it's not now. And going through this low, that would completely change our view for that point in time. It just means that it's not on the hot watch list.
Well, that's why we put it in the second half.
We put it out for a few more months down the track.
Yeah, it is, because right now, we're talking about we're not even quite mid-May.
It's
and
sideways,
we're looking at,
really, isn't it?
Yeah, so we're looking maybe from June onwards from this point in time, actually. So I think it's a good looking. So let's have a quick, go back to A2 Milk just for briefly before we do go on, and let's have a quick look at A2 Milk on that weekly chart. Now, as you said, it's all-time highs, and it's a bit more blue sky. You think it's probably got about another 20 to 30% in it, around a $20 stock, but we're seeing this stock trending really, really nicely.
But it doesn't mean it's going to keep doing that now. That's the point.
Correct. And so that's why we're saying it's in that all-time blue sky territory, etc., whereas Bellamy's is not at this point in time. So in contrasting, they both look like they're going to be going up.
But often when stocks are in the blue sky, there's nothing much overhead to slow them down, and that's a really positive thing for stocks that have been able to jump that hurdle and make it to the new all-time high, because there's a lot of stocks on our market that still haven't done that yet.
So what do you want to talk about now?
All right, so Brambles is another one. I mean, that was one in another report that we've looked at as well. Now, I've actually left some analysis on that chart, which I didn't need to, but I have. You can
This is giving people a taste, aren't
I'm giving it away, aren't I? You can see there's a level down there at around that $9 mark, which has proved to be a really strong level for Brambles. Now, looking at some of the history of the Brambles chart, you can see that it's got really toppy around these sort of levels, that $12 to $14 mark, and it's struggled for all of these years. So we're talking about since 2000, it's nearly 20 years, and it hasn't been able to trade above it.
Yeah, again, not a buy and hold stock for portfolio, but
not.
It's one of your favourite stocks. I know that for trading, and
it's a great trading stock just because look at the trends. I mean, look at the run that it had from that low in 2003 to this high up in 2007, and again, like even prior to that, this low here in 1995 all the way up. Similar sort of opportunities both times, and again we've seen it here, not so much here because it spent so long going sideways, but once this stock got going through that level in 2013, then there were more opportunities to trade this one, and again more recently, which has been really nice to see.
You think that's going to springboard it through that all-time high, wouldn't you?
Well, it does look like it. It's a question of whether it's going to come back first temporarily or not. But in terms of the upside to that all-time high, if we're looking at where it's trading at now, it's about 15% or something. So that's still reasonable in terms of an opportunity to get some profit on it when it gets going again. But once it gets through that blue sky, like A2 Milk, the sky could be the limit for it.
Well, I think you're going to, because I know if a lot of people look at those levels like previous all-time highs or those resistance, and they sit back and wait, and there's a vacuum at the top of those. So when it breaks through, all of a sudden it just goes hell for leather because it has broken through that, where everybody's been a bit nervous about whether it does get through that. So you'll see increased buying when it breaks through that, but it does look really, really nice to me. Yeah,
and it's a very volatile stock as well. Like you can see when it does trade down, it will give you some warning. It'll trade sideways for a little while before dropping off. Here, where it's more toppy, it doesn't do that. It just comes straight back. And again, we see three tops before it then eventually capitulates and has its biggest fall in some time. So they're the sort of things to watch for as the stock's trading up. But at the moment, it's still sideways and still looks okay. All right, CGF is another one. Now, Challenger's had its real fair share of troubles because of the industry that it's in, so in annuities, so they've lost a lot of business, or their growth has dropped right off. So that's the relationship between their results and the share price, which is factoring all of that in. But my view is that they're now looking at new endeavours, so they've been able to get their product offering on different platforms, which I think is a little bit of a light at the end of the tunnel for Challenger. But look, I'm not sure that it's going to change overnight, because these things never do. It takes time, but the market does tend to factor things in 6 months in advance, as you know.
Yeah, they do, and I think it's like that old Buffett saying: "Buy in doom, sell in boom," and it hasn't come back a lot, has it? It's come back a fair distance, but it looks like there's a lot of support there for it. And, if it does start to turn, it could be a really nice buy for the second half of 2019. And it does trend well.
Yeah, well, look, this is a really important level for it, where it's trading at now. I'm not saying it's not going to go further south before it then finds support, but I'm really happy with where it's actually finding support now. It is only trading sideways at the moment, so we need to see some, decent commitment behind it before we would even consider risking client funds in a stock like this. And looking at the trend, it is really steep, so sometimes that can give a nice opportunity if you get a trend line. If you follow Dale's teachings in his book, How to Beat the Managed Funds and Accelerate Your Wealth, you'll learn how to apply trend lines, and this is a good example of where that comes into it.
Isn't it?
Even on the monthly chart, you can apply those trend lines that you'll read in the book. You just have to make sure that you've got the right, the rules lining up. But at the moment, it's looking interesting. So next one.
This one, Fortescue, that's one of the ones did we put that in the early one for this one? I can't remember.
Yeah, FMG's been on our watch list for a while as well.
It's been a phenomenal trade for a lot of our students, making 90+% on this over a period of time. And it is, again, it's one of those really, really good trading stocks. And at this point in time, we've seen, you've seen there's a lot of resistance around this sort of level here, and it's broken above that. That's the exciting part. It's now broken above that, and it is moving up. Now, whilst it's got a little bit of short-term weakness, we're on that point at this point in time of how far is it going to go. Now, we're still bullish on the stock. And as I said, we were looking at it. We had a lot of people buying it somewhere down around about here. So there was, again, like talking about what Janine was talking about with trend lines. When it broke through a trend line through here, and so there was a really good buy somewhere in the early $4 or under $5. You could have picked this up. Now it's at $8 over a matter of weeks and months. So it's a great trading stock if you have rules around it and protecting yourself. But
it's been a great stock for the fund as well that we run, which has been nice to see.
Yeah, it's been beautiful.
I mean, like you said, that level was a 10-year resistance level across the stock. The longer in time that those resistance levels persist, the stronger that they are. So that was why it's really nice to see it charge up with the strength that it has and push through that level. And look, this week so far, it's still strongly up. But this is the point where a stock has been accelerating for a while, where you've got to start to watch it. So, at the moment, I'm not saying that this one's a buy either. I'd rather see it come into it in a better position, and it's possible that it actually may give a sell signal first before we get that next opportunity.
These stocks we're showing people, and I often on our live show that we do, and when we've been on TV like Sky Channel, that sort of stuff, people of us give us these stock codes that we've never heard of before, of these low cap stocks under $1, 10, 20, 30, 40, 50 cents. And they think looking at some of these spectacular runs on some of these stocks and trying to emulate that, getting in at the back end of it. But these stocks like A2 Milk, Bellamy's, Brambles, and FMG here, all make significant moves, but they're so much easier to pick because they run better on rules, because they're so much more liquid. And so people aren't gambling with these sorts of stocks. They're actually getting better trades if you've got rules of buying and selling rules, as I said. But I see most people are guessing at what's going on because they're following everybody else into stocks rather than leading what's going on. So, and to me, it's really exciting. We're putting stocks like this in front of people.
Okay. Now, the next stock is Iluka. Now, this is a far more, this is quite a volatile stock. It's probably in the league of FMG. Given that it's a mining stock, you'd expect that to be the case. The interesting thing about it is it's sort of in a bit of no man's land at the moment. So I'm a little bit on the fence with Iluka until it makes its next move. I really like the patterns that it forms over the history of the share. However, there's always an upside and a downside when you're looking at any stock and doing the analysis. there's a scenario for if it trades above a certain level, then I'm expecting X to unfold. If it trades below a certain level, then I'm expecting Y to unfold. So that's where, at the moment, we're just waiting to see which way this particular share goes. But similar to FMG, look at that resistance level that we've had, and that's one of the things that I really liked about it. We've also had this stock on the list for a while as well, and it has provided some good trades over time. Looking at the resistance, though, across here,
that's massive,
it's really
around
strong,
that
isn't
$12. Yeah, and I actually think it's quite interesting because that all-time high is way back in 2011, so it's like 8 years ago, which means, and you got that sort of thing on a Telstra and some of those other sorts of stocks that are really starting to take off right now.
Well, it made an all-time, when the mining sector topped out in 2011, it sort of followed suit and traded down for quite a while. So you can see the low down here in 2015. So it's easy to sort of think, oh, well, I'm just, once this stock, you know, if you were holding it back here in 2010, I'm just going to let it run. This is things going gangbusters and keep making as much money out of it as I can. But every single stock, and I was talking to a client yesterday, who's one of our fund clients, and explaining that it doesn't matter whether it's a bank, whether it's a big mining company, all of those stocks have periods where they're falling sharply or over a long period of time, because eventually the longer term pattern has to unfold. It doesn't stay bullish forever. No,
it doesn't stay, but no stock stays bullish forever. And I think that's a mistake a lot of people make, is they think everything's just going to go up and time will tell, time will fix all wounds, and it doesn't necessarily in the stock market, whereas it might be in the property market. You know, time in the property market might make you a bit more money, but stocks, you can get stocks going down like this for 7-8 years.
Oh, look, I mean, imagine if you picked it up, you thought you were getting it cheap back in 2012. Will you still be in a loss that all it's done is go sideways for years? Yeah, and that's where the people you've got to look at it like a portfolio. I know we talk about it in my book, and we often talk about it with students, and we all definitely talk about it in our videos, and that it's, you hold this stock thinking, oh, well, I'll sell it when it gets back to that $19 mark, but you're going to have, now we're now 8 years down the track, and how many years before it gets back through that all-time high? And you could be waiting 10, 11, 12 years, and well, just
you're killing your portfolio.
Think you could have put your money into something like that instead.
Yeah. Well, that's the thing. It's the opportunity cost. And people don't understand that. They just don't want to sell because they don't want to realise the loss. But realising the loss allows you to profit far more over the coming years. And right now, this is looking quite nice, and it's looking better than it has for quite a few years. Yeah.
Of course, if it falls away from where it is right now, then it just stays on the shelf until it does.
Stop being an economist where you got one hand on either side. No,
well, that's what you taught.
Yeah, I know it is. You've got to look at your downside and make sure that you're not getting into stocks. But you've got to protect that downside and let the upside happen. But to me, you've got to always have that alternative view. If it goes up, this is where I get in. But if it goes down, I'm not getting in, and I'll change my mind. And that's about having good, solid rules around your buying and selling. And all too often we find so many people say to us, hey, I know how to buy, I just don't know how to sell. And knowing how to sell is far more important than learning how to buy, because pretty much anybody can buy a stock.
That's a very wise thing to say, so just remember that. If you're listening.
I am very wise sometimes.
So Santos. Okay, now this is a very volatile stock, quite unpredictable at times. And it tends to gap around a bit. Now, it's really unusual to see gaps on a monthly chart of a share, of any share. And this is what this particular stock has done. Now, it has come back. You'll see that it did fill the gap here on the monthly chart, and it's held up really nicely since.
Another big resistance level.
Another big resistance level for it at the moment. Now, it would be a nice thing to see, steady, orderly pullback from that level before it then moves up. So, in the short term, we're not saying that this is a buy right now. That's why we're talking about the second half. We just like to see the stock prove itself that it is going to keep running.
Can I say that's such an important statement? Okay. I can say that because I already just said it.
Yes.
But the reason why is because we were talking about a little bit earlier is everybody gets in after things are happening. So that's what I'm saying.
That's because that's often when the news announcement comes out or something's written in the media. and they've had a good report when the share's been rising, because often this sort of stuff's already factored into the share price.
Yeah. So what we're suggesting is get in before everybody else figures it out, but you're actually getting in based on rules that will get you in really early before the run really takes off, but you're getting in at very low risk, but you're also following a set of rules. And that's really what we're talking about here, is all too often people wait, the stock takes off 10, 20, 30%, and then everybody goes, oh, I'll jump in now. But you're getting in at the end of the ride, not necessarily at the start, because if this does give us an entry, it's likely to be when it breaks that resistance level around that 740 odd mark, that there could be 40 or 50% in that.
Look, if it pulls back and trades below that 624 mark or 620, 630, then obviously we'd just be sitting and waiting for another opportunity, because it can always go lower. Once the stock's starting to move down, it can always trade lower, and we could, worst case scenario, we could see it come back around that $5.60 mark. So that's what you've got to be mindful of when you're looking at the downside potential. So looking at Wesfarmers, next one.
Another one of your favourites.
Yeah, Wesfarmers is a great stock, but it's really done poorly, through this period here. So 2013 all the way through to 2008, that's 5 years of hanging on to a stock similar to what we were talking about before, that's going nowhere. So sometimes you've got to be prepared to make the hard decisions and cut stocks that are not performing. But look, Wesfarmers has turned things around. They got rid of Coles. And look, some argued whether that was a good time to do it, but look, I think they have made a good decision, and now they're on the acquisition trail and looking for great opportunities for the company, which they've recently been looking into a bid for Kidman Resources.
Correct. Yeah. Very, very much so. And it is. It's like, it's interesting when you talk about cut the deadwood out, and it's like people with this favourite sporting team, football or whatever else, they go, oh, that player's, a bit of a deadwood, but, why don't you cut them? But then they won't do that with their own portfolio. It's okay with their footy team.
That's interesting.
But
I don't want to get too much into football.
I know, because your team lost on the weekend.
Well,
and mine's on top.
Okay, so no one's bragging here at all.
No one's bragging, no.
Okay, so looking at Wesfarmers, I think it's still got some good upside potential. In the short term, we may see it consolidate a little bit, because it has had a really steep run, challenging that all-time high. And often when stocks trade towards their all-time highs, they'll pull back. I mean, we've had, if I just quickly go back to the monthly chart, we've had 4 months up so far in terms of the green bars, but from the low, it's 5. We've got this inside bar.
Yeah.
This one here. So there's about 5 months in there. And typically it's very unusual for this stock to just have a straight run like it did after the GFC occurred. Often it'll have 4 or 5 months up, and then it will turn around for a while.
So you'd be expecting this month to be down a little bit?
Look, I'd like to see it. Ideally, I'd like to see Wesfarmers push through the high first. I don't know that it's going to do that yet, so I'm just letting the stock confirm for us what it's going to do rather than preempting.
Okay.
But
so this
should be one on the watch list. Now, I've actually added 2 higher risk stocks to this list, which normally we would have big debates about whether to do this or not, wouldn't we?
We would,
but it's not so. They're not illiquid stocks, and they're not. As you can see by the chart, they're not ready to be looking to purchase yet. It's just that I really like the way that this stock had unfolded with this move down. A big drop into 2016, it pushed back up, and then it's extended all the way down to this level here. Now, looking at the all-time high price for the share, I can see that there's a really nice level somewhere around where it's been trading recently. Now, if the stock maintains itself and gets back above that figure around 320, 330, then this could actually bode really well and be a really nice level for it to push off from.
Well, the current move up is really, it's longer in time than all of that downward move. So outside of that,
except for that little move here,
yeah, but we've actually had more months up so far than we've had prior since the all-time high.
So what you're saying is it looks like its personality's changing.
It's like a seesaw. It looks like it's the swing is moving to the other direction, or the pendulum's moving to the other side of things at the moment. But it's still a little bit too early to tell.
Yeah, exactly.
But it is looking much better like that in terms of, because we balance out things in as I said in the introduction. We talk about price, pattern, and time. So we're looking at the balance of price, we're looking at the balance of time, we're looking at the balance of pattern and how stocks unfold in all of those areas. So we're getting a real confluence of rules and analysis to determine not only, number one, direction first, always direction we go for, and then secondly, it's about the strength of that direction. And most traders don't even understand direction, even though they mistakenly think they do. They're quite often trading counter to the direction, or they're thinking it's going up, but it's actually going down, or they think it's going down when it's actually going up.
That's a really good point, because an example of that was this rise here from the 2016 low all the way up here. A lot of people thought it was on its way again, but look, shortly after, it provided a confirmation. There's a specific type of exit that occurred here. We could have had a trend line. You could have had another form of exit, which we teach in our courses. And so the stock told us that it was going down and not up, or was likely to fall. And then shortly after, it did exactly that. So that's how we knew what was more likely to happen with it. But now, looking at it, it's making higher bottoms and higher tops all the way up. Last couple of weeks, though, have been a bit soft. After this big rise, you would have expected it to continue, but it's been sold off. Now, it may recover from that. We're just waiting to see. But if it continues to fall down, which it could very well do, in the short term, then it'll just mean that we just leave it there for a bit longer and wait for it to be ready and picking at the right time. See, if you think about how predators in the wild work, they're not going to just run after every single piece of game that they're trying, because they want to get a feed, they're hungry, they need to eat. And so in that case, the lions and the tigers, I think, are the best. They stalk the prey and they actually wait for that right time to pounce, to increase their probability of actually making sure that they capture the animal and get their dinner.
Well, they're going to expend a hell of a lot of energy, so therefore they're trying to conserve that, because they don't want to have to do it at a time where it's not highly probable they'll catch the prey, because they'll use a lot of energy. And to me, you do that on stocks as well. And
I always cringe though on those shows like David Attenborough, when
I'm always,
and that if you watch those shows, even though it's interesting, even though it's interesting, that something's going to die in the during the show.
It is. But can I back to your point about whether the stock's going down or not and what people are doing? Like I've had some more emails recently about AMP. Yeah. AMP's just had its all-time low.
I was almost going to put AMP on the list. Can we just bring it up while you're talking about it?
We can bring it up, but because to me, it's AMP is, I'm looking at it, you're looking at it, but we're not certain it's falling away. But we've had people going, I want to buy AMP because it's hit an all-time low and it's been going down forever and a day.
But is that the all-time low?
But is that the all-time low? Because you could have said 2 months ago, 4 months ago, it was the all-time low. And people are going, but it's cheap now, can I just get in and hope it rises? Well, no, because it's now around that 220 mark. But what happens if it goes to $1? You don't know. And that's the thing, is you don't know what's coming up in terms of volatility, because you can't predict volatility. But right now, we're not getting in.
Once a stock's in free fall like that, it is much harder. Yeah. We actually have levels that we've marked. So the analysis tells us where it's probable for the stock to turn around. And it may turn around here, because there is a level around where it's currently trading.
Absolutely.
Look, I think.
But this could be the dark horse for the year.
Yeah. Look, I have a
really dark horse.
I had 20 stocks that I wanted to put on the list. So I haven't revealed them all. So maybe we can do another record and we look at the other 10 at some stage.
Pushing it, aren't you?
But they're all saying yes. Please show us more.
Yes, please show us more. So what's the next one?
Okay. So Resolute Mining, RSG. Now, it's an interesting share, very messy share.
What a trading stock.
Well, I picked this because we've been getting a lot of questions on the show we run on the Wealth Within Live YouTube show between 7 and 8 on a Tuesday. And it's more fitting with the type of stocks that people are bringing up.
Yes.
So I thought, well, look, I'll put in a couple of those because it is a trading stock and it's something that's, as an individual, you could trade. But look at it.
Yeah, it's definitely not a buy and hold. I mean, since 2000, you're just going up and down and up and down. So
regardless of what you read in the media, regardless of what anyone tells you about the fundamentals, always check the chart first to see if there's actually good money being put against this stock. I mean, that's what you want to see. Yeah. So if we know by looking at the chart that one of the biggest stumbling blocks for this stock, it's going to be, there are actually a couple. One of them is about here somewhere. So it's about that $1.50 mark, and then there's another one above that, higher still, which is around the $2.50 mark. So we know that there's some really important levels there, and I'll just squash the chart back up so we can see that a bit more clearly. But again, like these other shares, if a stock's able to get through that level eventually, it's gangbusters from there.
From there.
So be patient and be the tiger or the lion and wait. At the moment, we're seeing a consolidation occur around
And
this
that
$1.20. Yeah. So looking at that, you know, we would say that it would at least need to get through that. That'd be one of the hurdles we'd put on it.
Well, how many times have you, I mean, you brought up an interesting thing, is how many times have you had a conversation with somebody about a stock and they're saying, you know, and it's a terrible stock, it's going down, and they go, yeah, but they're reporting they're going to open a new mine, they're going to drill for this, they're going to release this new report, they're going to get approved by the FDA, or they're going to do that.
Don't get sucked into that.
And these people are just constantly talking about if, and we're saying, but it's down, and but they're just so focused on all this possibilities of what might happen, and that's the difference between a trader and a speculator.
We like optimists.
We do love optimists, but that's sort of blind optimism sometimes, and sometimes it's just unwise and it's just ignorance. And to me, it's about buy stuff that goes up, sell stuff that goes down. It's pretty simple in my book, and that's what we're talking about here. And it doesn't matter what the media is saying, and it doesn't matter what all the reports are coming out. It's either going up or down, and it's pretty easy to pick that if you have some rules around it. Now, we're not saying to avoid those fundamental criteria that you're seeing, but it's buy on confirmation, not speculation, and you sell on confirmation, not speculation. And today people are speculating the market's going to crash, so I'll just get out, or they're speculating on other things. And I had this chat a couple of days ago with a guy about some stock that's likely to get this medical approval somewhere, and it's going to go through the roof in his mind, and I go, are you crazy? And he's lost a lot of money on it already, and he's been holding it for a long time. And it really is not fairly smart to do if you're wanting to be a good long-term investor, and it's definitely not smart if you're a trader. But
once you get too emotional involved in it, and it becomes like if it keeps falling down, the only thing that's making him continue to hold is his ego, because he wants to be right. He doesn't want to lose. You know,
correct. And that's it. So that's it for the stocks, hey? Yeah,
look, I'm just looking at Resolute just briefly again. Okay. Just remember that we're not saying, like the other ones, we're not saying that it's a buy now. We're talking about these are stocks that we think have the potential to perform, but they have to meet certain rules. They have to jump certain hurdles, and we need to be prepared like the lion or the tiger. And when they do, when everything sets up and it's all ready to go, then that's when, and your rules are met, that's when you look to buy it. Well, when you can see there's money behind it, not when it's in a sideways move or a decline, is what Dale was saying before.
Well, that's that confirmation you're talking about, where, you know, from that point of view. You don't start the game until somebody blows the whistle, you know.
That's a good point.
So wait till the whistle blows, and then you can get in and do what you need to do. So, but that's it for the stocks for this one. So great.
Thanks, everyone.
Thanks for watching right to the end of this video. For those of you who are new to this channel, remember to hit that subscribe button now. Also, Janine and I do a live YouTube show each Tuesday night at 7 to 8 p.m. Eastern Standard Time. So here you can ask us all the questions about things trading and investing.
We would love to see you online next Tuesday, and if you have always wanted to learn how to trade but you're not sure where to go or who to trust, we're Australia's only accredited share trading educator. So get online and check out our highly regarded courses on www.wealthwithin.com.au. Make 2019 your year to take control and get trading well.
Also, a good present for yourself and those of you love is to get a copy of my latest book, Accelerate Your Wealth. It is in all leading bookstores and on our website, so click the link in the description below and get yourself a copy.
We hope you enjoyed this report. Goodbye, good luck and good trading.
Thanks and goodbye.